right, let's get right into it. We're going to break down a massive financial scandal where over $1 billion just vanished. It's a crazy story about a modern-day gold rush that went completely off the rails, and it really makes you ask a fundamental question. In our digital world, what's actually real?
You know, this comment I saw online just nails it. We live in a world of clicks and digital balances, right? But the line between owning a real thing and just owning a promise, well, that line can get really blurry. And as we're about to see, it can get downright dangerous. That tension is at the absolute core of what happened here. And this is the number that just stops you in your tracks. $1.4 billion. And get this, that's the conservative estimate of how much investor money was frozen when just one platform went under. Some people on social media are saying the real number is closer to $19 billion, which would put it right up there with the whole FTX disaster. Just incredible. Okay, so let's set the scene. To understand this, we've got to go to Shenzhen, China. This is where a huge craze for buying gold, driven by skyrocketing prices, suddenly turned into an absolute nightmare for tens of thousands of regular people. So this platform at the center of it all, Jie Wo Rui, we'll call it JWR, basically just flipped a switch one day and stopped all withdrawals. Poof, gone. Can you imagine that? You're one of 150,000 people who think their life savings are safe, invested in gold, and then you wake up and find you can't access a single cent. Naturally, this led to massive protests, and the government had to step in and create a special task force just to figure out where all the money went. All right, so here is where the story gets really weird and kind of counterintuitive. This platform didn't collapse because the price of gold crashed. No, it collapsed because the price of gold was soaring. I mean, how does that even happen? Well, the answer is one of the most powerful and riskiest tools in all of finance. And that tool is called leverage. What JWR was doing was letting people control a huge amount of gold with just a tiny bit of their own money. We're talking 40-to-1 leverage. So for every $1 you put down, you could make a bet on $40 worth of gold. It's a way to magnify your wins, for sure, but as we're about to see, it can also magnify your risk to a catastrophic level. And this is exactly how the whole thing imploded. Thousands of investors used that crazy 40x leverage to bet that gold prices would go up. And you know what? They were right. The price surged, and suddenly everyone had these massive profits. On paper. But here's the killer detail. JWR didn't actually have the physical gold or the cash to pay everyone out. So the second people rushed to withdraw their winnings, the whole system just crumbled like a house of cards. This really brings us to the core issue, the fundamental difference at the heart of this mess. See, with physical gold, you hold the metal. It's in your hand or in a vault, it's yours. But with paper gold, like what JWR was selling, you don't own the gold. You own a promise from a company. It's super easy to trade, but if that company goes under, well, that promise can become completely worthless. So, as you can imagine, the second this JWR thing collapsed, the internet just exploded. It sparked this huge debate that's been raging for years. Is it better to own the real, physical thing, or is the convenience of a digital version worth the risk? And look, you gotta admit, this person has a point, right? Owning actual physical gold is, well, it's a pain. You've got to figure out how to store it safely, which is a whole headache, and then when you go to sell it, a lot of dealers will try to give you a price that's way below the market value. It's not as simple as just clicking a button. But then you've got the other side of the coin. You see comments like this one. For the folks who'd been preaching, if you don't hold it, you don't own it, this scandal was the ultimate I told you so. It's a perfect, brutal example of what they call counterparty risk, the very real danger that the company on the other side of your deal just goes belly up and can't pay you. So here's the basic dilemma laid out. Physical gold gives you that security. You know it can't just disappear if a company fails. But it costs you inconvenience. Paper gold, on the other hand, is incredibly easy and liquid, but you're taking on the risk that the platform itself could just implode. It's that classic trade-off between security and convenience, and there's no single right answer for everyone. Now, it's really important to understand that this JWR collapse didn't just happen in a vacuum. It was more like the first big crack to appear in the ice during a much bigger storm that was brewing in the global markets. It showed how a single rumor could send shockwaves across totally different assets in just a few hours. And man, look at how fast this all went down. We're talking about a 72-hour tremor that shook everything. It kicked off with a rumor that the U.S. Federal Reserve might get more aggressive and raise interest rates. That fear alone was enough to send a panic wave through the markets. Gold and silver, which people often buy to hedge against inflation, got hammered. Then tech stocks, which are super sensitive to interest rates, took a nosedive. And then even Bitcoin fell off a cliff.
It's a wild example of how connected everything is now.
I mean, just look at these numbers. It's brutal. In just a couple of days, silver lost almost 40% of its value. Gold dropped 16%. And it wasn't just commodities. Even a giant blue-chip stock like Microsoft plunged. It just goes to show you that when market fear takes over, the sell-off can be incredibly fast and widespread, hitting everything from tech to these highly leveraged platforms like JWR.
Okay, so after digging through the collapse, the online debates, and that wider market panic, we're back to that big question we started with. What are the real, tangible lessons we can pull from all this? What does this teach us about trying to navigate the financial world today?
So if there are a few things to really take away from this whole mess, it's these. First, leverage is a double-edged sword. It can make you rich, but it can wipe you out even faster. Second, you have to know who you're dealing with. The platform you use can be just as big a risk as the asset you're trading. Third, regulation matters. It's there to provide safety nets that just don't exist on these unregulated platforms. And maybe most important of all, know what you actually own. Is it a real asset, or is it just someone's promise to pay you? And that really leaves us with the big question for our time, doesn't it? In a world that runs more and more on digital promises, a story like the JWR collapse is a huge wake-up call. It forces us to think hard about risk, about what ownership really means, and ultimately about trust. Because where you decide to place that trust might just be the most important financial decision you ever make. Thanks for sticking with me on this one.